Hi guys, welcome back to the channel, and in this video, the second video in a series analysing Weare8, an ad tech firm looking to raise £1 million. And I'm going to share my screen. I'm going to go through it now, like I've done in the past. Okay. So they've granted me access. So I'll view the document. I've raised 1.5 out of their 1 million. I should be able to just scroll down past all of this. Here it is. They're invested at. Okay, and the PDF. Okay, now this is an ad tech firm, and I've got experience in ad tech. So I've got marketing experience, and I work for WhatsApp, so I'm very aware of how this works. So far, they've got a globe, they've got a few Alexander Trent, Liverpool FC footballer, Rio Ferdinand, ex-footballer for England, a few nature shots. There's their contents. Let's see if it's like transformational. I think that's interesting. Growth potential I'd like to look at. How they scale I'd like to see. Let's have a look. Say that social media is broken. The world is at an imbalance, and I just turn people into products. Social networks that should have served us now harm us, but it doesn't have to be this way. Imagine a world free from hate on a social app that recognizes your path to change the world. Imagine a future where you're paid every time you watch an ad, and where we say United States, our precious planet. So in a way, they're saying that they're going to make it easier for us to get paid. I don't think that really fixes the problem. Giving a small percentage to charity sounds like a good idea, but let's see what it really boils down to. 500 bill of global digital advertising market is facing massive challenges as brands are actually seeking alternatives to deliver on their business goals, all while supporting their sustainability and D&I commitments. Personally, I disagree with this. I've got 12 years of experience in the digital advertising market. I now work for one of the biggest companies in the world, Meta, for WhatsApp, 3 billion users. And we're not trying to necessarily, like big companies aren't always trying to match their business goals with sustainability and D&I commitments. So that's the first thing I kind of disagree with. I don't think marketing and advertising spend is necessarily tied up with trying to also solve sustainability and D&I commitments. I think they're separate goals. So I think that's a little bit, I'm not sure that's completely correct. Maybe some startups try and do both. Maybe if they're in the ethical space themselves. But I don't think it's a big proportion of that 500 billion spend. Feel free to let me know what you think in the comments as well. Poor attention engagement rates, average engagement rates is less than 1%. Yes, that's true. Fraud, an estimated 30% of all digital advertising is fraudulent. I think it'd be interesting to read about that. I think it really depends on how you define fraud. There is some things, for example, people not necessarily viewing all the ads that are the kind of viewability metrics. You know, there's some things about that, but it'd be interesting to see what they think. Where they get that from. Brand safety and online hate, an estimated 5% of digital ads are unknowingly appearing next to hate speech, sexist, and racist content. That's to do with advertising settings. You can restrict some of that in advertising platforms. So, yeah, I'd imagine that 5% of digital ads that are served unknowingly against this kind of content, a big percentage of that falls with the advertiser not really maybe knowing what they're doing. Brands are suffering fatigue from Facebook marketing and are actively seeking alternatives. Let's have a look at this. Impression completion, younger targeted market, 16 to 24-year-olds. They're calling this the science of advertising. Let's kind of see if it is very scientific. So yeah, targeting younger people. They've got impression level and completion level. I'm not really sure what they're talking about when they talk about the completion level. Is that viewability? I guess. So they're saying at the TV level it's 52, at YouTube it's 16, at Facebook it's less than 1%. Obviously, like the price of TV ads is more expensive than Facebook ads, and you're not always looking when you're doing Facebook ads. It's not always about impressions. It's also there's different goals within media and advertising spend. Looking at the older segment, it looks like more impressions for traditional media. YouTube is slightly bigger as well, not with the 50% completion rates, but at the impression level. And they're saying this looks like they're positioning their brand against Facebook. Facebook ads are bad. Other media is good. So let's keep that at the back of the mind. Science of advertising. It's interesting they're using that expression because I like to call my style of advertising scientific marketing or advertising. I think I've got some validity in that because I talk about constants and variables and like to use a test and learn approach. Plus, my grandfather is one of the world's most famous scientists of the last 100 years. Specifically in the physics space. Probably more accurately the last 30 years. But anyway, I think I've adopted some of his scientific methodology for advertising. This chart doesn't strike me as very scientific. Let's see how it goes in the other slides. People, especially Gen Z and Millennials, are looking for brands to value them and align with their values. How important is it that you brands support and make social impact? 94% of respondents said it's important. And remember, what people say is not necessarily how they act. That's number one to think about that. Are you interested in watching more paid brand videos to support charities? This is a very unusual question because ads are generally the types of ads they're talking about are they're pushing out that the users aren't searching for the ads. They're being kind of they're being shown to people involuntarily. So they're asking users here, would you like to be shown ads for charities versus versus normal advertisers? And they're kind of saying yes. So that's interesting. Would you recommend Weare8 to friends and family? Saying 99% of people would. That's data from 50,000 people. That begs the question, why aren't they? If 99% of 50,000 people would recommend Weare8 to family, why aren't they 500,000? If you can say that young people, Gen Z and Millennials, might know 100 people or 1,000 people, or even 10,000 people. I on my social media there's over 1,000, probably somewhere 1,500 maybe. If these people are more socially inclined and have more followers, why aren't they more than 50,000? That's a valid question. We built a transformational solution, so they think it's transformational. I do think it's interesting. So the social app that you get money in your pocket every time you watch an ad. The question for me is, how much do you actually make from watching a video? And is that aligned to kind of helping the planet? Where you join millions of people to take small actions every day and support the planet. So they keep mentioning that there's an aspect of charity there. For advertisers, we're delivering radically better business results by distributing ads in a more effective, transparent, and cost-efficient way, all while supporting the planet. So they're paying people to watch ads. Does that mean it's going to improve business outcomes for advertisers, which is what they really care about? I don't know. Why invest? They've mentioned this 500 billion of digital ad spend, right, for disruption. I think that's what they're saying. I don't think. I'm not sure. We'll see. Transformational ad delivery model. I think it could be transformational. I think it's more transactional, to be honest. I.e. that everybody gets a share of the advertising pie, and there's a bit for charity thrown in, 5% or whatever it might be. Strong business validation. I'm sure they'll talk about that later on. We can question that and have a look at it. Clear path to profitability. We can look at that as well. World-class team, talent, and partners. Don't know what they mean by world-class. Maybe they're good. Let's see. Weare8 people are valued and paid for their time watching brands, right? 50% of the money going into pocket and 5% going to a brand, a charity of the brand's choice. So we've got Trent Alexander, the footballer chap, 8 stage, get inspired by exclusive content, push notification, receive push when you have brand ads. There's a brand ad from Cadbury's, otherwise known as Mondelez. Get valued each time you watch an ad. receive payment into Weare8 wallet, £36 there. It doesn't really say how much you get paid. Impact, pay your earnings forward to charity. So they're asking you to pay your earnings to charity. I don't know how much they're paying as a business. So that's a question, how much do you make as an individual? We'll have to see. Number two, how much are the business making? From a user perspective, they're trying to target Gen Zs and millennials. They'll want to know about that. And it's interesting they're asking you to pay it forward. When the deck's been saying that, that they're a brand, they're transformational, they're disruptive. I don't know how much they're giving to charities themselves. Of course, the brand is choosing a charity, so you have to align with whatever the brands. So Cadbury's might go with fair trade producer of chocolate or something like that, but it might not be the brand that you care about. So that's interesting. People get access to the 8 stage, a hate-free evolution of the social feed, exclusive content from global talent. So basically, they're shitting on Facebook, but they're trying to create their own social media platform. Rio Ferdinand is involved, and there's some Premier League players bringing in the best of and exclusive content to the 8 stage. It's a hate-free and ad-free evolution of the social feed. Not really sure what that means. It sounds to me, I can be skeptical of times. I'm always happy to be proven wrong by the world and by other individuals with different viewpoints. But it sounds to me like it's a platform for these other individuals to grow their own social media platform and their own social media voice in an exclusive way with their own new social media platform that kind of gets rid of hate speech. So it's maybe, does that mean that it limits free speech? Because, what is classed as hate is there is some qualitative and subjective view of what's considered hate speech. If you say, I don't like this ad, or I don't like what you're doing, is that hate speech? I don't know. Have they gone into that? No, obviously. Have they explained it? Not really. I think it could be good, but it's all in the execution. It's not, it's not really like saying it. And I do agree. I think parts of social media are quite toxic. Twitter, I think in particular, can be very, very, very negative and toxic. I had to come off it because of some of the hate speech I was getting. So I don't really use Twitter very much. But anyway, distribution agreements is where they're talking about going with different TV partners. So they've obviously got some deals with Channel 4 and UK TV, 4 mil in airtime, distribution partnership with EE. So I'm not quite sure where that would come in. Out of home and social campaigns. So I guess that's what brands are paying for out of home ads. 100 plus creators creating exclusive content and micro shows for the 8 stage. They've got 100 plus creators on their social media platform. Okay. Global Talent committed to inspiring, uniting fans to join Weare8 and change the world with them, creating exclusive content, regular social posts, regular advocacy, participation. So they've got different people: Rio Ferdinand, Jordan Henderson, Harrison Osterfield. I don't know all of these people. I know most of them, but they're all social media people, and they're all probably incentivized to grow this social media product. I imagine they're investors as well. That's fine as well. I think that could work. It's could be a virtuous circle where more content creators create content, and it grows the community, and that grows the marketplace, and that helps charities, and that helps the world. But I have I look at things in both ways skeptically. Maybe it's not going to be that good, and maybe it's just going to be a collection of a couple of influencers, and it becomes kind of echo chamber of like the same people that you hear about on, the Rio Ferdinands and Gary Nevilles of this world, Jordan Henderson. It's great to hear from them, but it's good also to hear from different people. So, and with with my open-minded hat on, I think it's good to be able to criticize as well. I don't think it's hate speech. I think it's really hard to define, and they have to do a really good job about what's the difference between a negative comment and being critical versus hate speech. I think there's quite a big difference there, and I think it's quite difficult as they grow. If they get millions of users, they're gonna have the same problem as Facebook has, which is it's very time consuming. AI struggles to deal with hate speech. So hopefully Weare8 is better than Facebook at this. I sincerely doubt they're going to be, but I'm happy to be proven wrong. Weare8 delivers better business results to brands with fully completed video views, insights, and attention. Obviously, because they're paying users, that makes sense. So ads are delivered directly to consumers. They opt in and they watch the video. They're guaranteed full completion because they're being paid. Brands receive meaningful data and automated child donations with every campaign. All campaigns are carbon negative. Fraud prevention system in place. So they're offsetting their carbon production, obviously, because all electricity produces carbon because it's burning of fossil fuels and all that kind of thing, I guess, unless they're doing it in some extraordinarily creative way where they're only using companies and servers that use solar energy or whatnot. Fraud prevention, it'd be interesting to see what they're doing with that and how it's different from other providers. I would like to see how this really works under the hood, kind of delivering better results to brands. There's a lot of technology in the branding space, in the programmatic space, in the Adtech space, which talks a good talk, but doesn't really walk that walk, doesn't really give that many results. It's all kind of vanity metrics of, click-through rates and viewability rates, but how does that add to a brand's actual reach? How does it add to their actual business results? How does it add to their actual growth? And I think it's a bit questionable when you're just paying an army of people that they might not translate into customers at the end of the day. So is it cheaper? I don't know. It doesn't say that, if it is cheaper than YouTube or other programmatic advertising platforms, then you can argue that it's cheaper on price. But when they're talking about the click-through rate, is obvious that there's going to have a higher click-through rate because you're forcing and mandating people to watch it. So I think it'd be good. I don't know if they're going to go into that in the next slides. Let's see. They developed their own self-serve ad manager to make it easier for brands to set up and manage campaigns. That's good. SAMI, Sustainable Ad Manager Intelligent, enables brands to run their own ad campaigns. This is what I'd be looking to do as well. I'm an ad manager. This is what I do. So you can buy your audiences. You can view insights. It's audited by PwC with no frauds. Okay, fine. I think there's some question marks there, but it all sounds good. That sounds good. Better results. They're talking about the view-through rates and opt-ins and better click-through rates. You're paying people, so that's of course that makes sense. You've got commitments from large brands. That's good. Some of these brands I've invested in actually. Climate and Chip. Yep. So they're saying it's an exceptional return on investment from click-through rates. I mean, it's hard to tie ROI to click-through rates. They answer questions as well. That's interesting. You could get some really interesting data from people answering questions. So I think there's some value in that. Because there is, for example, you can do a like-for-like comparison between survey results. You do have to pay for survey results. So if this is cheaper than that, then you could argue there's a differential there. Return on investment is a strong kind of statement. So you need to tie it to what do you mean when you say return on investment. Click-through rate is not return on investment. And even answering questions, you can say like for like, it's a cost differential between survey results, but what does it lead to? That return aspect, the R in ROI, they need to quantify what that is. They need to qualify it and tell us what it is and give us some examples. I don't know if they're going to. Okay, they're not. Weare8 is a carbon negative platform. I think that's great. They're using ecology. All right, so they're basically saying if brands shift 6% of their entire social budgets through Weare8, we can make their entire social media spend carbon neutral. I mean, for a big brand, that could equate to a lot of money, millions or tens of millions, especially when they're talking about this £500 billion target, which they mention repeatedly. So I think it's very unlikely. So they're making claims about all social media being their platform being carbon negative. And the big dependency is that everyone shifts 6.5%. So if we think about that, 6.5% of that, 500 billion figure would be about, 25 billion. Like, are they really going to get 25 billion of the global ad spend onto their platform? which would have to equate to 6.5% of all of those advertisers. It wouldn't be 25 bill from, from a small percentage of advertisers, because that wouldn't necessarily work. If they want to do it globally, they need to do that. Yeah, I mean, I can't see them getting there. But I'm going to look at the whole of this deck, and I'm going to go back to this raise and see what the chances are. But I'm feeling very skeptical about this. I think that they're not going to become fully carbon negative. I'm doubtful that every brand would shift 6.5% of their social budgets. I just don't think they haven't given me the meat on the bone here. I shouldn't say that because I'm a flexitarian, but you know what I mean? Like, why would a brand shift 6.5%? We spend a lot at Meta, and I don't think we would spend 6.5% on this without knowing what the return was on the ROI. And just paying people to watch an ad is not return on investment. So they're a certified B Corp. They're making a commitment to making business good. They've got this partnership with Ecology, and they invest in carbon offsetting. They've mentioned that. I don't think big companies are going to get involved in putting 6.5%, so it's not going to fully offset it. But anyway, the highest standards of verified performance and accountability and transparency. I haven't seen any transparency yet in this, so I'm a little bit dubious about that. So they're working with Dentsu. That's really good. These are big. In fact, these are all massive groups. Group M, I think, bought the State Group, which is a big agency. Havas, Publicis, and Dentsu. These are the agencies that Meta work with. I think Dentsu and Publicis are the guys we work with. So that's good. They're getting media in the right places and campaign. So that is good. So and that's pretty much kind of how advertising works anyway. It's a lot of relationships. At the end of the day, though, the sustainable financial growth that is sticky and lasts will be with brands that see a positive ROI. So they haven't really dug into that. I mean, they've talked about positive ROI, but they haven't been that transparent with what it means, apart from people watching the ad. Rapidly scaling user base with high retention and ad views. Of course, they're going to have high ad views because they're paying people. Retention's interesting. Obviously, maybe if people make more money or something. So with media agencies partners now in place, we can supercharge our user growth through distribution partnerships. We make 30% gross margin on every ad served, 95% acceptance rate. All right. So out of their 100%, 5% is going to the charity, I guess, or is that 5% of what the user earns? They haven't clarified that. It's been a bit confusing in the day. And they're making 29%, which is good for the business. That is good. How much are they giving away to charity? Don't know. So let's look at this. This is ads served. This is just impressions. So they've served kind of 7 million ads or 7 million impressions, which is absolutely tiny in the advertising world. It's a bit of a joke, really. In fact, that's forecast. So it's less than 1 million ads served on their platform, which is just unbelievably low. Okay, yeah, that's surprising. Let's move on and see if there's any good points we can look at. Okay, so Weare only needs a small fraction of the UK digital ad spend to be a significant player. This is something that a lot of startups say. We only need 1% of the total of the total car market to be a multi-billion pounds company. Great. We only need 1% of the UK digital ad spend to be a significant player. Great. But it's not about that. Anybody can do that. I could say, if I was a house builder and only wanted 1% of the houses built in this country, I'd have 10,000 houses. How likely is that going to be? So that's the question we need to ask ourselves. How likely is it that they'll get 10% of the ad spend in the UK? I'll talk about that at the end of the presentation. I'll give my overall views. Okay, so they're talking about the ad market. They're not in the ad market. They're a small section of the ad market. But anyway, they're talking about the ad market here. So how has the forecast for digital ad spending changed from 2019 to 2024? March 2021 forecast is up on the 2020, obviously, because 2020 was the global pandemic. But they're saying it is $25. 1 second. I'm not sure what they're using there. 25 billion is that, or it's billions? Yeah, sorry, I was looking at that very quickly. So it's billions. It's gone up to 25 billion from 23, which is previously forecast. Yeah, and it's going up. Fine. Digital ad spending worldwide is a growing trend. Yes, but it's not about the market. We know that the market's growing. That's fine. But how they're going to penetrate the market? What's their they're supposed to be marketers. What's their marketing strategy for that? And what's in it for the user? I don't see anything there. Okay, so Facebook revenues are 4.5. So they're targeting 1% of Facebook revenues. Okay, Australia. This is kind of disappointing. How are they going to do it? I can't see it. I can't see it. They're going to do some partnerships. Maybe that'll work. I don't know. So they're saying they've got a world-class team. CTO, I don't know where he's worked. It doesn't say. The CMO. I don't know. They've got these brands below. Have they worked? I don't know if they've worked at these brands. Google, Uber. Can't see here. I'm looking at this quickly. The COO has worked at Uber, WeWork, and Groupon. I don't really see much here that strikes me as, they've got some good brands, but it doesn't really doesn't kind of drive that much confidence, I'll be honest. Join us to transform the digital marketing economically, empower millions of people, and help save our precious planet. Key details. Well, how much is the user going to make? If a user decides, fuck it, I don't want to be an Uber driver part-time, I don't want to, do babysitting, or I don't want to teach a skill. If you imagine you're like 18 to 28 and you want some extra money, you've got different options to do, right? You could start a YouTube channel, or you could work in Uber, you could buy and sell on Amazon or Etsy, or do some creative endeavor. You could, babysit. You could do all sorts of different things. They haven't pointed out how much you would make per hour if you were to watch lots of adverts and try and save the precious planet by watching adverts. They haven't mentioned that. Anyway, they've mentioned other things. Key details: Series B, preferred round. So 9.6 out of 15 million secured. They haven't secured the amount they need to. They've got 45 million pre-money and $60. Is that, or 60 million? Is that just $60? It's obviously a typo there, but it's quite an important typo. They've got some investors. So Sue, the CEO, is putting $1 million. Channel 4 is putting 3. UK TV is putting 1.2. Centerstone Capital is putting 2.2. I guess that's some kind of VC firm, maybe. Others is 2.2. So they're serious people are putting in serious money, but how? What are they seeing that I'm not seeing? Maybe there's a way. Maybe I'll go on the internet on their website and see, how much money you would make. And the other thing is, if it's not a growing amount of money, let's say this is quite an important metric. They talk about customer churn in software as a service and digital businesses, which this is. What's the churn level? If you're only making £10 an hour or whatever, now when you're 18, when you're 23, are you really going to do that? Are you going to keep doing that? Probably not. Also, inflation. Does it link with inflation? Does your earnings go up with inflation? If it's £10 now when you're 18, in 3 or 4 years, that £10 is only worth £5 an hour. Are you really going to bother to watch adverts for an hour for £5 in a high inflationary market? Probably not. Have they gone into that detail? No. Have they gone into the detail of the return on investment? No. I'm very skeptical. Have they gone into how they're going to prevent fraud? No. Have they gone into why they're better than Facebook? No. Or any other social media platform. They've got one case study here. So maybe here they'll bring it out. Okay. So Cadbury's invested 30K. 30k. I imagine Cadbury. I don't know, but I would imagine the ad budget at Cadbury to be somewhere between kind of 3 and I don't know, maybe 30 million in the UK. So it's way less than 6.5% they got here. So they're not offsetting anything. So that going back to their 6.5% offset metric for offsetting carbon and stuff. I'm quite passionate about green projects, but I get annoyed by when brands, they're kind of just saying they're doing it, and I'm not sure if they are. And I think there might be something there for that. CPM, that's the cost per 1,000 impressions, is £7, which is quite high. Engagement rate is obviously 100% because they're paying people. Unique individuals is 44,000. Times by 2 is 88, but that's not unique people. That's so it's still 44,000, but they've just times it by 2 because there's 2 AdSense. That's going back to impressions again. But anyway, completion rate is 96%, so some people are dropping off. Click-through rate 87%, even though they're paying people. Social impact is 5%, so I guess that's £1,500 of 30k. Cadbury's uses campaign to test the efficiency of the messaging of the ad. As well, gather insight on buying decisions and what impacts consumers the most way. 63% of people feel more favorably about Cadbury after watching their ad. Don't know how they measure that. Again, it seems a bit fluffy. Cadbury's are using this to test something about the ad. 30k is like way less than 1% of their ad spend. So what I would want to see is, when did they do that campaign? Why aren't they doing 30k a month or 300k a month or 3 million a month? They're a big brand. They've got a lot of money. There are consumer brands, that want to reach, Gen Zs and millennials that love, that are interested in buying chocolate, So why aren't they spending more with them? Babyliss, again, this is in the B2C area with women and beauty products. CPM is the same. The engagement rate is obviously the same. I don't know if they've doubled that as well, if the engagement rate was 50% or if it was 100%. Unique individuals, 14,700. Again, they've doubled it, even though it's not unique. But yeah, the uniques is 14,700. The impressions, they could have had another line of being 29,000. But anyway, click-through rate was only 49%. And social impact was 5% again. So they planned a 2-video campaign. The first asked questions around hairstyle, blah, blah, blah. Viewers were targeted second ads on how to, blah, blah, blah. What was the return? What were they interested in doing? What was the outcome? Again, it's very, very unclear. I'm going to stop sharing this and then I'll talk about my overall opinion. I'm going to be balanced here. I'm not going to just mention the negatives. Okay, so I'm glad that I looked at this deck because, in the first video, I was looking at it and I was quite positive. I think this has kind of balanced me up. Wow, my hair's being a bit funky. Ignore my hair. It's being a bit weird. But what have we found out? Well, we found out that they're kind of talking about their kind of social kind of status or ecological impact. I think that's incredibly limited. 5% of the ad spend 5% of the ad spend they're talking about is not a lot. Even if you'd imagine that this Cadbury's and Babyliss are some of the campaigns which the good campaigns. If they were putting on their investor debt, it might even be their biggest campaigns. Which is 30k is just nothing in the advertising world. It's just tiny. So brands don't have confidence. It looks to me that at the moment they're not showing a lot of confidence in this company at the moment. Maybe they've chosen to do a crowdfunding campaign to generate more buzz and to get more users. That's a valid kind of goal and aim, because maybe the brands have come back to them and said, well, you've only got 30,000 people on your platform, or 50,000 people. They didn't say how many users they've got actually on the platform, but I think the max for Cadbury ad was 30,000. And they said somewhere that it was based on 50. There was a survey based on 50,000. So we could assume that there's 50,000 on their platform. And Yeah, there's a couple of question marks because like they said previously that they could grow organically from friends and family referrals. Okay, well, how many? If they're so good at tracking and advertising, if they have world experts, world class experts, which they said in their deck, well, how many people are referred? How are they growing? How many users are they going to grow to in the future? What's the expected revenue? Where's the cash flow forecast? Where's the gross and net margins? They mentioned the margin of, what was it, 30%? Was it 29, 30%, something like that? There's nothing on that. For investor deck, you'd expect that. They've raised millions of pounds from serious people. Where's the information? I get that the crowdfunding market, the platform they're going after is generally, mass people, and it's maybe not necessarily sophisticated investors. But there are sophisticated investors on the platform. There are people that invest 5, 6, 7 figures on these platforms. So why not have that in there? I'm confused by that. There's no marketing strategy in there. They said they've got partnerships, distribution partnerships. So is it going to be above the line TV ads? Maybe. I know Climate do a lot of out of home, and I think they might even do TV ads as well. And Chip as well have done TV ads, and they've grown that way. So, but why isn't it in the deck? They should have that in the deck. Like 100%, they should have that in the deck. I think they've done some good stuff. Like they've looking at the positives, they've done some good stuff. They've got an ad serving platform, which every ad manager would expect. So that's good. They've got a social media network, which sounds good, but then they're not showing much about that, which is confusing. But that sounds good. They've got some users, which is good. But yeah, there are some red flags, and the red flags for me is they've got no marketing strategy in there. They've got no numbers in there from the investment or cash flow or business sense. They're the kind of ethical numbers or the green kind of credentials seem to be quite thin on the ground. And it wasn't clear that if the 5% was from the individual or from their business. And similarly, from the user perspective and the customer experience, there's nothing on that. I'd like to know more what the customer experience is, how much they're going to make, and what's the average age profile of the people. The older people care about the planet. I'm just a millennial, and I care about the planet. I invest in ethical companies. How come there's no information on anything to do with that, on their ethical, on the engagement metrics, on the demographics, their profile of the platform, on how they're going to appeal to get younger people, older people, how they're going to spread the word. I'm just a little bit skeptical. It doesn't mean I'm not going to invest. I think I'm going to probably invest 100 quid or something just to keep. It's in my, it's in my field. It's my industry. So it's good to be aware of this. I don't want to be too negative, and I think in principle, it's a good idea. I like it. You can get paid from watching ads, but the question is it below minimum wage, or can you get good money? Then it becomes a different proposition. And if you're going deep down the ecological route, then are these causes getting a lot of money? If they are, great. The platform will grow, but it doesn't look like they're getting much money at all. And lastly, I think the major concern is that brands, maybe the actual platform itself is not really coming up with enough to inspire big brands to spend more money. £30,000 from Cadbury's is pennies. It's nothing. And that's a concern. If they've got a lot of users and they've got a great technology platform and it's supposed to be fraud free and all that kind of stuff, why aren't these companies investing more? And that's why I'm not going to invest a huge amount. I'm investing £100 speculatively just to check the progress. I'll probably be proven wrong because a lot of people don't necessarily do the same kind of analysis and thought process that I go through. But if you like this, like the video, if you've got any questions, queries, or comments, let me know. It'd be interesting to see how many people put in. I know that 99% of the money was put in by somebody else at this point. I think it was over 1.4 of the 1.5 million that's been raised today was from somebody else. So it'd be interesting to see if the crowd, go after this and invest a lot more. I know that 4 other technology companies. I think I covered Moneybox the other day, and that raised 6 million in 6 days. This has been going 6 days and it's raised 1.5. But if you think about the crowd, I think they've only raised less than 100,000 from the crowd. So they're not generating the momentum that you would expect. I know that Moneybox has a massive following and is doing really innovative stuff. How innovative this is, not sure at this point. We're really not sure. I don't think it's groundbreaking at this point. It's got some influencers, which is good. It's got some brands, which is good, but they're not investing a lot, and maybe they're not going to. Don't know. I think it's really dependent on what they can offer, and I have some slight question marks over the team. How can they make this a bit better? Because it doesn't look that good. But I'll put 100 in and just keep my tabs on it. I'm not going to invest a grand or 10 grand or anything like that. And I think that's maybe what the crowd's doing as well. Anyway, I hope you enjoyed this video. If you do, like and subscribe. I'm going to be doing other videos about pitch decks, analysis, startups, other types of investing, etc., etc. Knowledge is power, especially the right kind of knowledge. Progress is everything. And I'll see you guys in another video. Take care.